Hello and welcome to Stock and Roll, the podcast where we deep dive into the world of equity compensation. In this episode, we return to Berlin with Dirk Besse, a seasoned lawyer from Morrison Foerster, to explore the complexities of redesigning incentive programs for companies undergoing an IPO. Building on our previous discussions about pre-IPO considerations, we dive into the critical aspects of transitioning employee compensation structures when a company goes public. And that includes timing considerations, stakeholder management, and retention strategies for key talent. Dirk shares insights on the fundamental differences between public and private company incentive designs, highlighting the increased regulatory constraints and the importance of flexibility in program development. Okay, now we're up for another podcast, this time again with Dirk Besse, and we're back in Berlin. Sun is still shining, and super happy to dive a bit into the post-IPO part of our last discussion. Welcome, Dirk.
Yes, thanks for having me at the show. Let's make that a routine. So whenever you're coming, we arrange for the sun and you for the interesting topics to discuss about.
Definitely. I think Norwegians are not spoiled with sun, so we can make that into something. Yeah. So today's topic, last time we spoke, we discussed a bit pre-IPOs. We looked a bit at what sort of exit clauses are there, what's the change of control, and talked a bit about the pina colada syndrome, where we end up in a situation where many key people gets rich and don't want to work anymore. So now we're a bit continuing there. Let's say we are soon to IPO, and then we dive a bit into redesign. So if we start off then and asking a question on a very broad one, but where do we start when we see it's an IPO? We have many people earning on an IPO. How to kind of go about it?
Yeah. Well, the life of the company completely changes with the IPO. I think that's very important to realize from the outset. And this is not happening from one day to the other, like so many people think when they hear a bell ringing at the trading floor. But actually, the IPO journey starts at least a year or 2 years ahead of that, when the planning and the design for the period thereafter is starting, and this is really heating up. And the redesign of the incentive program for management, but also for employees, is taking place in advance. So this is one of the key elements in the prospectus with which the stock is presented to the capital markets. The incentive program takes an important role. It has to be aligned with the equity story and with the growth story that the company is telling to the market. So that's economically quite a challenge to mirror the ambitions of the company on an organizational and economic level, then into the key performance indicators and the design of the program. So you would usually have an external program advisor that is helping with identifying that and modeling that in a lot of detail. And then you need to convince the banks accompanying the IPO that this is a right and purposeful program that supports the future development of the company. But you also need to convince the investors then buying the shares and the participants of the program. They need to sign up for that as well, and they need to feel motivated and engaged with that new program following IPO.
Yeah, 100%. Are there any, I guess it's many, but are there any common like pitfalls or stuff you've seen that they should have, why didn't they, or some effects that can be negative if they don't do it like this or this, or what do you try to avoid in a way?
Yeah, the main pitfall that I would be careful not to tap into is missing flexibility. If the persons in charge, develop a program, they can fall in love with their theoretic construct of how the company should live on after the IPO.
Yeah.
But reality is a beast, especially if it's in the future. And it's really impossible to predict how the markets will develop, how the company will develop, whether there are still pivots in the development and the strategy of the company. And can the incentive program live with those kind of future developments of the company? So building in some flexibility, I would strongly recommend, because if the program falls out of, of the scope where it still works, then it's frustrating for everyone. It's frustrating for the participants, but also frustrating for the company, because they have only limited ability to amend an existing plan. We didn't touch on, but as a lawyer, I can tell you after the IPO, there are many, binding rules on how the program has to be designed, and it has to be followed, and it can only in rare instances be changed. That's starting with the program for the top management, but usually you follow with the design of the program for other participants and employees of the company. You follow the management program, because you want to have alignment and coordination among the program. So that is a difficult balance to be had, and flexibility is helpful.
Yeah. And timing, like kind of launch of program, is it at the IPO date? Is it 1 week after? Is it 1 week before? Just kind of, is it important at all to think about timing?
Well, it's at the IPO, and then I think details of the precise timing depend on the program and the company. I'm not so concerned about that. I think that's a detail to be handled.
Yeah, definitely. I remember that there was one. It's a bit back in time, but one company I was working a bit with that designed a program where they wanted to IPO, but they wanted to wait until it's, I don't know, 5 weeks after, something like that, because it was a lot of work in connection with the IPO, and then they want that. And the challenge was that their share price doubled during the first week or two. So then the the employee investors that were supposed to buy shares in the company at IPO had to buy at the double price. Otherwise, they will be put in a tax position. So that's like a case where, at least for them, of course, if it was the other way around, it would be positive, right? But I think communication, at least, if you do this, is very important.
Well-designed plan.
Yes,
I would say.
Yes,
well-designed plan.
Definitely.
Well, theoretically, at least under the German stock market rules, you could all implement the compensation. Program for the top management only after the IPO. But you have to issue the prospectus to the capital markets public in advance of the IPO, and in that prospectus, the investors, they expect clear statements on what the program looks like, and if they discover uncertainties, also including uncertainties depending on the development of the share price post IPO. I think that's a minus, and leads to a less appetite of the market for the shares. So why do it? Have your proper program up and running.
100% agree. I think also, like in some jurisdictions, it's an advantage if it's a smaller company, a smaller IPO, perhaps on one of the smaller stock exchanges. Like it's also some demands on number of shareholders you would need, and you can also help with all your employees buying, and there's everything kind of points to it. At least think through these things when you do the planning of timing, and I fully agree. Ideally, it's at the IPO, so you don't get that risk.
That may be another pitfall that people do not think of often enough. Such a program takes time. If you work with an external compensation advisor and you really want to go into the details of how this could mirror the future life of the company, that is not something done within a few weeks. No, that requires modeling, and it also requires communication with the stakeholders. Better start early.
I agree. And obviously, like, there's a big difference that there's huge corporations that have all these things in place because they're super professional. But there's also, call it smaller IPOs, where time and capacity in connection with the IPO is extremely pushed, and then it's easy to delay some of these things that are not so important in their views. But I think planning and understanding these things is always super important.
Well, you should have good service providers and good lawyers.
Yeah, definitely. Yeah, I'll note that down. Yeah. And then you touched a bit upon it, like in terms of advisors. We talked a bit about owners and the banks and the employees. When we kind of, if we're now a company with, let's say, 500 people IPOing in Frankfurt, how do we kind of, are there any other stakeholders who typically in the company runs these processes of redesigning a new program? Is it the CFO or CEO or HR or legal or, yeah?
Well, usually the companies come from a private environment, often startup driven and very dynamic. And a lot of the organization is very lean and is not fit for handling, the big additional bureaucratic requirements for listed companies. Though that is why those departments handling that kind of issues, they are usually built up in the process of the IPO. And you have an HR department, and usually you have an own compensation department that is handling that. And handling a real option program and stock program is quite a managerial task. You need accounts and for each of the employees and participants, and you need to track what they do and when they are entitled to exercise, and you need to compare that with limitations, because in certain periods you're not allowed to trade and to assign options and shares, and if there are insider information, certain employees might not be able to exercise. All those details need to be taken into account, and you need a system up and running which brings all those requirements together. And this requires not only individual departments being on top of their game, but also it requires a network and a rule of the game, how they work together. Legal, HR, finance, how they can, bring those elements together that make the program working and a success.
Yeah, I think what I find a bit interesting in this thing is when you are a pre-IPO company or a growth company, it's a very different nature than when you are a kind of a established listed company. But still, what you want to achieve is to retain people. You want to motivate people. You want to attract people. Those things are and align with shareholders. Kind of do you see any typical different instrument types, or if we were to design this kind of at IPO, would it be any major differences from what we had prior to the IPO or the growth stage to now that we were a public company?
Yes, I think there are differences. Of course, the startup companies pre-IPO are very much focused on achieving the IPO as an exit milestone. So it's about financial KPIs. It's the path to profitability, certain growth goals, and maybe expansion to other markets, other countries, and so on. Or depending on the type of company, also the development or the approval of a product or a pharmaceutical invention. So that is all very one topic focused. With the IPO, the stakeholder base and the elements that the companies are looking to, they are widening. Other elements become of importance, like ESG. So goals on how do we function as a company within the society, within the environment, and what do we do to take our place in that whole ecosystem. That is becoming more important, and employees expect that. If they work within such a big company which is also listed, they expect more than just a focus on a certain financial or strategic goal.
Are there still a majority of employee stock options, or do you see more investment programs, or kind of do the same people get, or do you go broader? I understand that's case by case also here, but are there possible to see any differences in before IPO and after?
Well, for Germany, I would say that the classic stock option program is still what you see the most.
Yeah.
But very often that is combined with additional elements, which are mostly then virtually. They are more flexible, and in a combination with a classic stock option program, and they offer a more attractive package, and also a package that is more flexible also in terms of timing and the waiting periods than the strict stock option program.
If employees, key employees, have a huge, call it like gains or gain at an IPO, do you see like and reinvestments of that, and you need to do that? Do you see any matching programs where you kind of say if you reinvest, you will get X number of extra shares or X number of options or so? Or is it clear like, okay, now you got your money, here's some options in the future? So yeah.
Well, retaining the best talent in the company after the IPO is a challenge.
Yeah.
If everyone has worked for years towards that goal, it's quite natural that some people say, hey, we achieved that goal, and now we go after another venture and opportunity. And I think in the last episode we've done together, we talked about the Pina Colada challenge, that people, just go off to the beach in those kind of situations. So how to tackle that and how to motivate people to stay on and to buy into the next development phase of the company, that's not easy, and you can think of a lot of ways to do so. You could force employees, depending on what the pre-IPO program is enabling. You can force them to stay invested for a certain period, like a commitment to hold shares after the IPO for a certain time period. You see that very often with top management, which is locked in for certain time periods, and the banks accompanying the IPO insist on that, that management cannot market their shares prior to a certain date. For non-management employees, you see matching rights, but you see also rollover offers at attractive terms, so that they reinvest their proceeds from the pre-IPO plan into the new IPO plan and at preferred conditions.
What would you say is the biggest difference when you want to call it like recommit and retain key people in an IPO versus if it's a private equity coming in and buying? I understand and kind of it's not a prepared question, but what would you kind of feel is the biggest difference there?
Well, I would say that private equity owners, they have much more freedom in designing those kind of programs, whereas IPO'd company, they are bound by the listing rules, which are applying to them from day one. And that makes it quite hard because you have also driven by investors a very strict pay for performance principle, and compensating for past achievements or, adapting to new situations. That is something which is really hard for the programs of listed companies. Whereas PE-owned businesses, they can build in more flexibility, and if they see that the situation is pivoting to a very different new reality, they can adopt. And that is an advantage.
Yeah, it is.
Of course.
And if it's an IPO again, then and you redesign a new program for this, and you mentioned like the banks and the owners are stakeholders here. Do you see them engaged in this topic? Do you see that this is important for them, and do they kind of get involved? Or would you kind of really, yes, they need to say yes, but you can basically design what you want and they will say yes?
Oh, no. To the contrary. This is a very sensitive topic, and you often meet a situation as an advisor in those kind of pre-IPO discussions where you realize that the stakeholders of that process have underestimated the complexity and the emotional sensitivity of that. For the participants of the program, it's like, I've heard that. That's mine. And they are it's also an element of being proud of what they have achieved. And then the banks, of course, they are very much focusing on how to market the stock to the capital market investors, and those are more future oriented, and they focus more on what the next step of growth of the company will be. So it's a complicated mixture of interests and sensitivities.
And the banks, they would be interested in this because of that. They are the ones that sell it to investors, and that's why they need to reassure the investors that here key people are really, really motivated. I see.
Yes, they may have a financial interest.
Communication. I understand that that's not necessarily your core topic, but I think I'll just ask a couple of questions on that as well. It's like, do people understand this if it's an IPO? Have you kind of, how do you kind of help them understand it? Are you ever involved in it? Have you kind of,
Well, it's just the two of us here sitting in a small room, so we can be very open here. No, people don't understand it.
No.
And it's sometimes a really bad surprise. And especially for companies post-IPO now bound to complex stock market compliance rules, they end up with equity incentive programs which are so complicated that the participants of the programs don't understand it. So whether there is a benefit flowing to them or not is for some of them really like a surprise. And I think that's a fundamental problem of the system we're living in that area, because a large element of why we do those programs gets lost. You should motivate the people, and you should give them a feeling of belonging to a project, and that is very important. So it's super important from my perspective, and it's maybe surprising that a lawyer is saying that. Simplicity is one topic I would always recommend to everyone here in terms of designing the program, but also in terms of managing it and delivering it to the participants. Must be easy, accessible. They must immediately see what they're entitled to and what they can get, or projections on it. And the same for the finance department that needs to run it. They also need to have an easy grip on it, and that will help, getting employees convinced that this is a real benefit for them.
I think this is one of the topics that I like the most. It's a bit like 100 euros is 100 euros. That's quite simple to understand. But like the value of getting a package of shares with some clauses, with some performance targets, with some, I think that what is actually the value of that in each participant's head, then it's how much do you understand it? How's your risk profile? How much do you know? And these things, to kind of get it close to 100 euros is 100 euros. For some, it may be 1 euro. For some, 0. For some, it may even be 300 because you're extremely ambitious, and like tapping into that and understanding those differences. And of course, I agree, simplicity is very, very important here. And also like how to communicate it, not in a way where everything is green and super fancy. It's risk, can go down as well. But being good at this, I think it's important.
And to stay engaged, whether it's going down or whether it's going up. That is not easy to be achieved, and communication must support that. So an internal communication strategy on the program, on its rollout, but also continuing thereafter, how the program is developing and what it means for the participants. That is very important.
When it comes to the listed environment and the designs that have been done, or not necessarily the science, but the instrument types that are here. Are there here any type of differences that you see in let's say, Germany versus other jurisdictions that you've had, and for an international global company headquartered in the UK, but with 25% of their people in Germany? Are there any things that the German participants would expect or challenges?
Not so sure about the psychology of the German workforce versus other countries, but giving the more restrictive tax regime that applies to German participants, you see a higher percentage of virtual programs developed for German companies. And if you roll out a true international program, and sometimes this program doesn't fit into a specific jurisdiction, then you would also come up with a virtual compensation that is mirroring that. And I think that is one element you see. But there's always a way around it, and to get it as equal as possible for everyone, it's just a lot of work. I think that everyone needs to be aware of. Setting up such a program and running it, it's a real task.
It is. Getting closer to the end here now, but it's often a bit also in our industry. There are some trends. Do you are there any things that you see more frequently appear, either if it's conditions or going wider or broader or more of these instruments, or are there any kind of things the last years that you've seen in the listed environment or in the signing of listed that come to mind?
Yeah, I see a lot of pressure from investors, which are the most influential group on those programs, on two things. One is the requirement for clawback optionality in terms of wrongdoings or certain elementary breaches of obligations by management. So that is often a requirement we see. And the other element that investors very strongly enforce is pay for performance and the avoidance of any kind of reward for underperformance. That should be avoided. So they're very sensitive to severance commitments and only want to see a classical participation in a positive development for the investor.
And the clawback, that's typically like if it's misconduct, or is it kind of where do you see like the wording limit of kind of clawback can be used versus not?
Well, over the years, it's you see this extended. But in order to have a balanced approach, I think you must also, the participant of the plan or the compensation program that is affected by the clawback, you must find a fair framework where everyone is knowing in which environment they do live. And you need to distinguish between clawbacks based on, for example, financial miscalculations. Sometimes you have the situation that financial accounts have to reopen and they are modified, and then the calculation of prior the payouts under the program have to be redone. And this should be I think that's a natural. It should be available to a clawback. And the clawback that is based on a kind of misconduct, that should be limited to clear cases where you want to give the company an easy way of avoiding payments, knowing that there is a counterclaim by the company because of evident misconduct.
And when you say investors, is that typically like proxy advisors?
Yes, those are the big institutional investors which are counseled by the proxy advisors, which who make that a requirement, and who review the plans and the compensation programs of the listed companies with a focus on those elements.
Boards, do they include boards as well in programs here, or is that something that proxy advisors or institutional investors don't really want?
What is it?
Board, chairman of the board. The board seats, do they also involve in the programs, or is that kind of thing that the proxies say no to?
Yeah. That's a sensitive topic. Yeah. Usually you would have the board members as the supervising body of the company not included in an equity incentive program because they are, they are supposed to have an oversight role and control the company without any element of dependency on the economic performance.
Yeah.
So that is at least the pure play of the more European approach to it.
Yeah.
That's very different in the US.
Yeah.
You would expect every board member to be incentivized on the success of the company and the shareholders.
Yeah.
Things get more fluid there, and we see that also for companies in Germany. Variable compensation elements to boards are taken into consideration, but it's a minority.
Yeah. I think that's very interesting. We often get that, like, is it common to, should we, can we? And it's super tough to answer. So I feel now that I want to ask about caps and breaks and everything else as well, but I'll stop it.
You also come across then cultural differences.
Yeah.
If you want to make sure that the board of a European company is internationally well equipped, then you have representatives from the US or from Asia on the board as well. And those board members, they bring their cultural experience with them and ask for stock compensation or
but if you
participation in programs.
But if you have European institutional bigger investors with an influence on the votings and they are doing proxy, then they would say no to that.
They're very reluctant to that. But that may be a development to be watched over the next couple of years. I'm not sure that this will remain the same.
No, I think it's interesting. No, but good. I'll try to limit myself now to continuing with a bit more questions. But it's been a pleasure talking to you. You're wiki and a library on these things, so it's always great.
Yeah. Bring the sun, and then we have another chat.
Perfect. Looking forward to that, Dirk.
Okay.
Good. Bye-bye. Thanks. Bye-bye.